Rule 1 Short Title and Commencement. These rules may be called General Financial Rules, 2017, and they shall come into force at once and shall be applicable to all central government ministries, departments, attached and subordinate bodies. The provisions contained in GFRs are deemed to be applicable to autonomous bodies except to the extent the bylaws of an autonomous body provides for separate financial rules which have been approved by the government. Rule 2 Definition. In these rules, unless the context otherwise requires, Accounts Officer means the head of an office of accounts or the head of a pay and accounts office set up under the scheme of departmentalization of accounts. Administrator means administrator of a union territory, by whatever name designated. Appropriation means the assignment, to meet specified expenditure, of funds included in a primary unit of appropriation. Audit Officer means the head of an office of audit. Competent Authority means, in respect of the power to be exercised under any of these rules, the President or such other authority to which the power is delegated by or under these rules, delegation of financial power rules or any other general or special orders issued by the Government of India. Controller and Auditor General means the Controller and Auditor General of India. Consolidated Fund means the Consolidated Fund of India referred to in Article 266(1) of the Constitution. Constitution means the Constitution of India. Contingency Fund means the Contingency Fund of India established under the Contingency Fund of India Act, 1950, in terms of Article 267(1) of the Constitution. Controlling Officer means an officer entrusted by a department of the central government with the responsibility of controlling the incurring of expenditure and or the collection of revenue. The term shall include a head of department and also an administrator. Chief Department of the Government of India means any of the ministries, departments, secretariats and offices is notified from time to time and listed in the first schedule to the Government of India Allocation of Business Rules. Drawing and Disbursing Officer means a head of office and also any other gazetted officer so designated by a department of the central government, a head of department or an administrator, to draw bills and make payments on behalf of the central government. The term shall also include a head of department or an administrator where he himself discharges such function. Ministry of Finance means the Ministry of Finance of the central government. Financial year means the year beginning on the 1st of April and ending on the 31st of March following. Government means the central government. Government account means the account relating to the consolidated fund, the contingency fund and the public account. As defined in these rules. Senate head of the department means an authority or person, not below the rank of a Deputy Secretary to the Government of India, declared by the concerned department in the Government of India as a head of department in relation to an identifiable establishment or establishments to exercise the delegated financial powers under these rules. Head of office means a gazetted officer declared as such in the delegation of financial powers rules and b any other authority declared as such under any general or special orders of the competent authority. Local body means an authority legally entitled or specially empowered by government to ch-1 Introduction to administer a local fund. Local fund means a local fund as defined in Rule 652 of the Treasury Rules. Non-recurring expenditure means expenditure other than recurring expenditure. President means the President of India. Primary unit of appropriation means a primary unit of appropriation referred to in Rule 8 of the Delegation of Financial Powers Rules. Public account means the public account of India referred to in Article 266(2) of the Constitution. Public works means civil, electrical works including public buildings, public services, transport infrastructure etc. Both original and repair works and any other project, including infrastructure which is for the use of general public. Reappropriation means the transfer of funds from one primary unit of appropriation to another such unit. Recurring expenditure means the expenditure which is incurred at periodical intervals for the same purpose. Expenditures other than recurring expenditure are non-recurring expenditure. XXVE Reserve Bank means the Reserve Bank of India or any office or agency of the Reserve Bank of India and includes any bank acting as the agent of the Reserve Bank of India in accordance with the provisions of the Reserve Bank of India Act, 1934, Act 2 of 1934. XXIX Subordinate Authority means a department of the central government or any authority subordinate to the President. XXX Treasury Rules means the treasury rules of the central government. XXXI Capex Model. In the Capex model, capital expenditures is used by the buyer to straightway purchase goods followed by procurement of consumables, arranging comprehensive maintenance contract after warranty period and finally disposing the product after useful life. XXXII OPEX Model. In the OPEX model, the seller provides the goods, maintains it and also provides the consumables as required and finally takes back the goods after useful contracted life. The expenditure is made by the buyer in a staggered manner as per the terms and conditions of the contract. Rule 3 Interdepartmental Consultations. When the subject of a case concerns more than one department, no order shall be issued until all such departments have concurred, or, failing such concurrence, a decision has been taken by or under the authority of the Cabinet. In this regard, it is clarified that every case in which a decision, if taken in one department, is likely to affect the transaction of business allotted to another department, shall also be deemed to be a case which concerns more than one department. Rule 4 Departmental Regulations of Financial Character. All departmental regulations, insofar as they embody orders or instructions of a financial character or have important financial bearing, must invariably be made by, or with the approval of the Ministry of Finance. Rule 5 Removal of Doubts. Where a doubt arises as to the interpretation of any of the provisions of these rules, the matter shall be referred to the Ministry of Finance for decision. Rule 6 Modifications. I. The systems and procedures established by these rules are subject to general or special instructions, orders, which the Ministry of Finance may issue from time to time. E. The systems and procedures established by these rules may be modified by any other authority only with the express approval of the Ministry of Finance. 3. Ch-2 General System of Financial Management. Rule 7 All monies received by or on behalf of the government either as dues of government or for deposit, remittance or otherwise, shall be brought into government account without delay, in accordance with such general or special rules as may be issued under Articles 150 and 283(1) of the Constitution. Rule 8(1)(I) Under Article 284 of the Constitution, all monies received by or deposited with any officer employed in connection with the affairs of the Union in his capacity as such, other than revenues or public monies raised or received by government, shall be paid into the public account. E. All monies received by or deposited with the Supreme Court of India or with any other court, other than a High Court, within a Union territory, shall also be dealt with in accordance with Clause I of Sub-Rule 1. Rule 8(2) The head of account to which such monies shall be credited and the withdrawal of monies therefrom shall be governed by the relevant provisions of Government Accounting Rules 1990 and the Central Government Account Receipts and Payments Rules, 1983 or such other general or special orders as may be issued in this behalf. Rule 9 It is the duty of the Department of the Central Government concerned to ensure that the receipts and dues of the government are correctly and promptly assessed, collected and duly credited to the consolidated fund or public account as the case may be. Rule 10 The controlling officer shall arrange to obtain from his subordinate officers monthly accounts and returns in suitable form claiming credit for the amounts paid into the treasury or bank as the case may be, or otherwise accounted for, and compare them with the statements of credits furnished by the accounts officer to see that the amounts reported as collected have been duly credited. Accordingly, each accounts officer will send an extract from his accounts showing the amounts brought to credit in the accounts in each month to the controlling officer concerned. Rule 11(1) Detailed rules and procedure regarding assessment, collection, allocation, Remission and abandonment of revenue and other receipts shall be laid down in the regulations of the department responsible for the same. Rule 11(2). In departments in which officers are required to receive monies on behalf of government and issue receipts, therefore inform GAR 6. The departmental regulations should provide for the maintenance of a proper account of the receipt and issue of the receipt books, the number of receipt books to be issued at a time to each officer, and a check with the officer's accounts of the used books when returned. Rule 12. Amounts due to government shall not be left outstanding without sufficient reasons. Where such amounts appear to be irrecoverable, the orders of the competent authority shall be obtained for their adjustment. Rule 13. Unless specially authorized by any rule or order made by competent authority, no sums shall be credited as revenue by debit to a suspense head. The credit must follow and not precede actual realization. Rule 14. Subject to any general or special orders issued by a department of the central government, an administrator or head of a department responsible for the collection of revenue shall keep the finance ministry fully informed of the progress of collection of revenue under his control and of all important variations in such collections as compared with the budget estimates. Rule 15(1). Rents of buildings and lands. When the maintenance of any rentable building is entrusted to a civil department, other than the Central Public Works Department, the administrator or the head of the department concerned shall be responsible for the due recovery of the rent thereof. Rule 15(2). The procedure for the assessment and recovery of rent of any building hired out will be regulated generally by the rules applicable to buildings under the direct charge of the Central Public Works Department. Rule 15(3). The detailed rules and procedure regarding the demand and recovery of rent of government buildings and lands are contained in the departmental regulations of the departments in charge of those buildings. Rule 16(1). Fines. Every authority having the power to impose and/or realize a fine shall ensure that the money is realized, duly checked and deposited into a treasury or bank as the case may be. Rule 16(2). Every authority having the power to refund fines shall ensure that the refunds are checked and no double refunds of amounts of fines collected or refunds of fines not actually paid into a treasury or bank as the case may be, are made. Rule 17. Miscellaneous demands. Accounts officers shall watch the realization of miscellaneous demands of government, not falling under the ordinary revenue administration, such as contributions from state governments, local funds, contractors and others towards establishment charges. Rule 18. Remission of revenue. A claim to revenue shall not be remitted or abandoned save with the sanction of the competent authority. Rule 19(1). Subject to any general or special orders issued by the government departments of the central government, administrators and heads of departments, other than those in the Department of Posts, shall submit annually on the 1st of June to the audit officer and the accounts officer concerned, statements showing the remissions of revenue and abandonment of claims to revenue sanctioned during the preceding year by competent authorities in exercise of the discretionary powers vested in them otherwise than by law or rule having the force of law, provided that individual remissions below ₹1,000 need not be included in the statements. Rule 19(2). For inclusion in the statements referred to in Rule 19(1) above, remissions and abandonments should be classified broadly with reference to the grounds on which they were sanctioned and a total figure should be given for each class. A brief explanation of the circumstances leading to the remission should be added in the case of each class. Rule 20. Departments of the central government and administrators may make rules defining remissions and abandonments of revenue for the purpose of Rule 19 above. I. General principles relating to expenditure and payment of money. Rule 21. Standards of financial propriety. Every officer incurring or authorizing expenditure from public monies should be guided by high standards of financial propriety. Every officer should also enforce financial order and strict economy and see that all relevant financial rules and regulations are observed by his own office and by subordinate disbursing officers. Among the principles on which emphasis is generally laid are the following. Every officer is expected to exercise the same vigilance in respect of expenditure incurred from public monies as a person of ordinary prudence would exercise in respect of expenditure of his own money. The expenditure should not be prima facie more than the occasion demands. No authority should exercise its powers of sanctioning expenditure to pass an order which will be directly or indirectly to its own advantage. IV. Expenditure from public monies should not be incurred for the benefit of a particular person or a section of the people, unless a claim for the amount could be enforced in a court of law, or b. the expenditure is in pursuance of a recognized policy or custom. Rule 22. Expenditure from public funds. No authority may incur any expenditure or enter into any liability involving expenditure or transfer of monies for investment or deposit from public funds, consolidated fund, contingency fund and the public accounts unless the same has been sanctioned by a competent authority. Rule 23. Delegation of financial powers. The financial powers of the government have been delegated to various subordinate authorities with a delegation of financial powers rules is amended from time to time. The financial powers of the government, which have not been delegated to a subordinate authority, shall vest in the Finance Ministry. Rule 24. Consultation with financial advisors. All draft memoranda for expenditure Finance Committee or Public Investment Bureau or Committee on Establishment Expenditure and Cabinet Committee for Economic Affairs or Cabinet shall be circulated by the Ministry or Department concerned after consultation with the concerned financial advisor of the Ministry 5. Or Department. A confirmation to this effect shall be included in the draft memorandum at the circulation stage. Rule 25. 1. Provision of funds for sanction. All sanctions to the expenditure shall indicate the details of the provisions in the relevant grant or appropriation wherefrom such expenditure is to be met. Rule 25. 2. All proposals for sanction to expenditure shall indicate whether such expenditure can be met by valid appropriation or reappropriation. Rule 25. 3. In cases where it becomes necessary to issue a sanction to expenditure before funds are communicated, the sanction should specify that such expenditure is subjected to funds being communicated in the budget of the year. Rule 26. Responsibility of controlling officer in respect of budget allocation. The duties and responsibilities of a controlling officer in respect of funds placed at his disposal are to ensure that the expenditure does not exceed the budget allocation. That the expenditure is incurred for the purpose for which funds have been provided. That the expenditure is incurred in public interest. IV. That adequate control mechanism is functioning in his department for prevention, detection of errors and irregularities in the financial proceedings of his subordinate officers and to guard against waste and loss of public money. Rule 27. 1. Date of effect of sanction. Subject to fulfillment of the provisions as contained in the Delegation of Financial Powers Rules, all rules, sanctions or orders shall come into force from the date of issue unless any other date from which they shall come into force is specified therein. Rule 27. 2. Date of creation to be indicated in sanctions for temporary posts. Orders sanctioning the creation of a temporary post should, in addition to the sanction duration, invariably specify the date from which it is to be created. Rule 28. Powers in regard to certain special matters. Except in pursuance of the general delegation made by, or with the approval of the President, a subordinate authority shall not, without the previous consent of the Finance Ministry, issue an order which involves any grant of land, or assignment of revenue, or concession, grant, lease or license of mineral or forest rights, or rights to water, power or any easement or privilege of such concessions, or involves relinquishment of revenue in any way. Rule 29. Procedure for communication of sanctions. All financial sanctions and orders issued by a competent authority shall be communicated to the audit officer and the accounts officer. The procedure to be followed for communication of financial sanctions and orders will be as under. All financial sanctions issued by a department of the central government which relate to a matter concerning the department proper and on the basis of which payment is to be made or authorized by the accounts officer, should be addressed to him. All other sanctions should be accorded in the form of an order, which need not be addressed to any authority, but a copy thereof should be endorsed to the accounts officer concerned. In the case of non-recurring contingent and miscellaneous expenditure, the sanctioning authority may, where required, accord sanction by signing or countersigning the bill or voucher, whether before or after the money is drawn, instead of by a separate sanction. IV. All financial sanctions and orders issued by a department of the central government with the concurrence of the Internal Finance Wing or Finance Ministry, as applicable, should be communicated to the accounts officer in accordance with the procedure laid down in the Delegation of Financial Powers Rules and orders issued thereunder from time to time. All financial sanctions and orders issued by a department with the concurrence of the Ministry of Home Affairs or Controller and Auditor General of India or Department of Personnel should specify that the sanction or orders are issued with the concurrence of that department along with the number and date of relevant 6. Communication of that department wherein the concurrence was conveyed. All orders conveying sanctions to expenditure of a definite amount or up to a specific limit should express both in words and figures the amount of expenditure sanctioned. Sanctions accorded by a head of department may be communicated to the accounts officer by an authorized gazetted officer of his office duly signed by him for the head of department or conveyed in the name of the head of the department. All orders conveying sanctions to the grant of additions to pay such as special allowance, personal pay, etc. should contain a brief summary of the reasons for the grant of such additions to pay so as to enable the accounts officer to see that it is correctly termed as special allowance, personal pay, etc. as the case may be. Orders issued by a department of a union territory government where audit and accounts have not been separated shall be communicated direct to the audit authority. Have been separated, copies shall be endorsed to the audit authorities. In case of sanctions in respect of matters where reference was made to the central government under the rules of business framed under Section 46 of the Government of Union Territory Act, 1963, the following clause shall be added in the sanction endorsed to audit. A reference had been made in this case to the central government and the above order letter conforms to the decision of the central government with a Government of India, Ministry Department of Letter No, dated copies of all general financial orders issued by a department of the central government with the concurrence of the Controller and Auditor General of India shall be supplied to the Controller and Auditor General of India. Copies of all sanctions or orders other than the following types should be endorsed to the audit officers. A. Sanctions relating to grant to advances to central government employees. B. Sanctions relating to appointment or promotion or transfer of gazetted and non-gazetted officers. C. All sanctions relating to creation or continuation or abolition of posts. D. Sanctions for handing over charge and taking over charge, etc. A. Sanctions relating to payment or withdrawal of General Provident Fund advances to government servants. F. Sanctions of contingent expenditure incurred under the powers of head of officers. G. Other sanctions of routine nature issued by heads of subordinate officers other than those issued by ministries or departments proper and under powers of a head of department. Sanctions accorded by competent authority to grants of land and alienation of land revenue, other than those in which assignments of land revenue are treated as cash payment, shall be communicated to the audit and/or the accounts officer, as the case may be, in a consolidated monthly return giving the necessary details. Rule 30 Lapse of sanctions. A sanction for any fresh charge shall, unless it is specifically renewed, lapse if no payment in whole or in part has been made during a period of 12 months from the date of issue of such sanction. Provided that when the period of currency of the sanction is prescribed in the departmental regulations or is specified in the sanction itself, it shall lapse on the expiry of such periods. Or when there is a specific provision in a sanction that the expenditure would be met from the budget provision of a specified financial year, it shall lapse at the close of that financial year. Or in the case of purchase of stores, a 7. Sanction shall not lapse if tenders have been accepted in the case of local or direct purchase of stores, or the indent has been placed in the case of central purchases on the central purchase organization within the period of 1 year of the date of issue of that sanction, even if the actual payment in whole or in part has not been made during the said period. Rule 31 Notwithstanding anything contained in Rule 30, a sanction in respect of an addition to a permanent establishment, made from year to year under a general scheme by a competent authority, or in respect of an allowance sanction for a post or for a class of government servants, but not drawn by the officers concerned, shall not lapse. Rule 32 Remission of disallowances by audit and writing off of overpayment made to government servants. The remission of disallowances by audit and writing off of overpayments made to government servants by competent authorities shall be in accordance with the provisions of the Delegation of Financial Powers Rules and instructions issued thereunder. 2. Defalcation and losses. Rule 33(1) Report of losses. Any loss or shortage of public monies, departmental revenue or receipts, stamps, opium, stores or other property held by, or on behalf of, government irrespective of the cause of loss and manner of detection, shall be immediately reported by the subordinate authority concerned to the next higher authority as well as to the statutory audit officer and to the concerned principal accounts officer, even when such loss has been made good by the party responsible for it. However, the following losses need not be reported: I. Cases involving losses of revenue due to a. Mistakes in assessments which are discovered too late to permit a supplementary claim being made. B. Under assessments which are due to interpretation of the law by the local authority being overruled by higher authority after the expiry of the time limit prescribed under the law. And C. Refunds allowed on the ground that the claims were time barred. E. Petty losses of value not exceeding Rs 10,000. Rule 33(2) Cases involving serious irregularities shall be brought to the notice of financial advisor or chief accounting authority of the ministry or department concerned and the Controller General of Accounts, Ministry of Finance. Rule 33(3) Report of loss contemplated in Sub-Rule 1 and 2 shall be made at 2 stages. I. An initial report should be made as soon as a suspicion arises that a loss has taken place. E. The final report should be sent to authorities indicated in Sub-Rule 1 and 2 after investigation indicating nature and extent of loss, errors or neglect of rules by which the loss has been caused and the prospects of recovery. Rule 33(4) The complete report contemplated in Sub-Rule 3 shall reach through proper channels to the head of the department, who shall finally dispose of the same under the powers delegated to him under the Delegation of Financial Power Rules. The reports, which he cannot finally dispose of under the delegated powers, shall be submitted to the Finance Ministry. Rule 33(5) An amount lost through misappropriation, defalcation, embezzlement, etc. may be redrawn on a simple receipt pending investigation, recovery or write-off with the approval of the authority competent to write off the loss in question. Rule 33(6) In cases of loss to government on account of culpability of government servants, the loss should be borne by the central government department or state government concerned with the transaction. Similarly, if any recoveries are made from the erring government officials in cash, the receipt will be credited to the central government department or the state government who sustained the loss. Rule 33(7) All cases involving loss of government money arising from erroneous or irregular issue of checks or irregular accounting of receipts will be reported to the Controller General of Accounts along with the circumstances leading to the loss, so that he can take steps to remedy defects in rules or procedures, if any, connected therewith. Rule 34 Loss of government property due to 8. Fire, theft, fraud. Departmental officers shall, in addition to taking action as prescribed in Rule 33, follow the provisions indicated below in cases involving material loss or destruction of government property as a result of fire, theft, fraud, etc. All losses above the value of Rs 50,000 due to suspected fire, theft, fraud, etc. shall be invariably reported to the police for investigation as early as possible. Once the matter is reported to the police authorities, all concerned should assist the police in their investigation. A formal investigation report should be obtained from the police authorities in all cases, which are referred to them. Rule 35 Loss of a movable property by fire, flood etc. All loss of a movable property exceeding Rs 50,000, such as buildings, communications or other works, caused by fire, flood, cyclone, earthquake or any other natural cause, shall be reported at once by the subordinate authority concerned to government through the usual channel. All other losses should be immediately brought to the notice of the next higher authority. Rule 36 Report to Audit and Accounts Officers. After a full inquiry as to the cause and the extent of the loss has been made, the detailed report should be sent by the subordinate authority concerned to government through the proper channel. A copy of the report or an abstract thereof being simultaneously forwarded to the audit officer and pay and accounts officer. Rule 37 Responsibility of losses. An officer shall be held personally responsible for any loss sustained by the government through fraud or negligence on his part. He will also be held personally responsible for any loss arising from fraud or negligence of any other officer to the extent to which it may be shown that he contributed to the loss by his own action or negligence. The departmental proceedings for assessment of responsibility for the loss shall be conducted according to the instructions contained in Appendix 1 and those issued by the Ministry of Personnel from time to time. Rule 38 Prompt disposal of cases of loss. Action at each stage of detection, reporting, write-off, final disposal. In cases of losses including action against delinquents and remedial measures should be completed promptly with special attention to action against delinquents and remedial measures taken to strengthen the control system. 3. Submission of records and information. Rule 39 Demand for information by audit or accounts officer. A subordinate authority shall afford all reasonable facilities to the audit officer and pay and accounts officer for the discharge of his functions, and furnish fullest possible information required by him for the preparation of any official account or report, payments and internal audit. Rule 40 A Subordinate authority shall not withhold any information, books or other documents required by the audit officer or accounts officer. Rule 41 If the contents of any file are categorized as secret or top secret, the file may be sent personally to the head of the audit office specifying this fact, who will then deal with it in accordance with the standing instructions for handling and custody of such classified documents. 9. Ch-3 Budget Formulation and Implementation. Rule 42 Financial Year. Financial year of the government shall commence on the first day of April of each year and end on the 31st day of March of the following year. Rule 43 1 Presentation of Budget to Parliament. In accordance with the provisions of Article 1121 of the Constitution, the Finance Minister shall arrange to lay before both the Houses of Parliament an annual financial statement, also known as the budget, showing the estimated receipts and expenditure of the central government in respect of a financial year, before the commencement of that year. Rule 43-2 The receipts and expenditure of the railways, being a departmental commercial organization, form part of the government's receipts and expenditure and are included in the annual financial statement. With the merger of railway budget with the general budget, the demands for grants and the statement of budget estimates of railways shall also be part of the general budget with effect from 2017-18. Rule 43-3 The provisions for preparation, formulation and submission of budget to the Parliament are contained in Articles 112 to 116 of the Constitution of India. Rule 43-4 The Ministry of Finance, Budget Division, shall issue guidelines for preparation of budget estimates from time to time. All the ministries' departments shall comply in full with these guidelines. Rule 44 The budget shall contain the following: I. Estimates of all revenues expected to be raised during the financial year to which the budget relates. E. Estimates of all expenditure for each program, scheme and project in that financial year. E. Estimates of all interest and debt servicing charges and any repayments on loans in that financial year. IV. Any other information as may be prescribed. Rule 45 Receipt Estimates. The detailed estimates of receipts shall be prepared by the estimating authority separately for each major head of account in the prescribed form. For each major head, the estimating authority shall give the breakup of the minor subhead detailed-wise estimate along with actuals of the past 3 years. While doing the head-wise classification, it may be ensured that item-wise breakup of all major items of tax and non-tax revenues are clearly identified and depicted in the receipt estimates. This is required to highlight all individual items of significance. Any major variation in estimates with reference to past actuals and budget estimates shall be supported by cogent reasons. The accounting heads under which major tax and non-tax revenues are collected shall be prescribed by the Administrative Ministry in consultation with the Budget Division in the Finance Ministry. Rule 46 Non-tax revenues. While the tax revenues, non-debt capital receipts including disinvestments and borrowings are managed by the various departments of the Ministry of Finance, the non-tax revenues are collected through all ministries, departments and other autonomous bodies and implementing agencies and comprise an important source of revenue for the government. Rule 47 User Charges. User charges is an important component of the non-tax revenues. Each ministry department may undertake an exercise to identify the user charges levied by it and publish the same on its website. While fixing the rates of user charges, the ministry's departments must ensure that the user charges recover the current cost of providing services with reasonable return on capital investment. Any deviation from these principles shall be specifically recorded with reasons justifying the setting of user charges lower than the cost recovery norms, if any. The rates of user charges should be linked with appropriate price indices and reviewed at least every 3 years. In order to enable ease of revision of user charges, the rate of user charges shall be fixed, wherever possible through rules or executive orders and not through a statute. Rule 48 Dividends and Profits. Dividends and profits including the transfer of surplus from Reserve Bank of India is a major component of the non-tax revenues. The payment of dividends, profits etc. by the central public sector enterprises shall not be delayed and must be paid within an appropriate time frame immediately after the decision on dividend is taken in the AGM. Ministries or departments shall monitor timely payments of dividends and profits. The dividend shall be payable as per the guidelines issued by DIPAM in this regards. Rule 49 Receipts Portal. The government has provided a public portal for online collection of various non-tax revenues including various fees and user charges through e-receipts. All ministries' departments shall take prompt measures for migration to e-receipts to ensure customer convenience and immediate credit of receipts to the government account. Rule 51 Expenditure Estimates. The expenditure estimates shall show separately the sums required to meet the expenditure charged on the consolidated fund under Article 1123 of the Constitution and sums required to meet other expenditure for which a vote of the Lok Sabha is required under Article 113(2) of the Constitution. Rule 52 The estimates shall also distinguish provisions for expenditure on revenue account from capital account, including on loans by the government and for repayment of loans, treasury bills, cash management bills and ways and means advances. Rule 53 The detailed estimates of expenditure shall be prepared by the estimating authorities up to the final unit of appropriation object head under the prescribed major and minor heads of accounts for both revenue and capital expenditure. Estimates shall include suitable provision for liabilities of the previous years that is to be discharged during the year. Rule 54 The estimates of scheme-related and other expenditures shall be processed in consultation with the Budget Division, Ministry of Finance in accordance with the instructions issued by it. Rule 55 The revised and budget estimates of both revenue and capital expenditure after being scrutinized by the financial advisors and approved by the Secretary of the Administrative Ministry or department concerned shall be forwarded to the Budget Division in the Ministry of Finance in such manner and forms as may be prescribed by it from time to time. Rule 51 Demands for grants. The estimates for expenditure for which vote of Lok Sabha is required shall be in the form of demand for grants. Rule 51 Generally, one demand for grant is presented in respect of each ministry or department. However, in respect of large ministries or departments, more than one demand may be presented. Each demand normally includes provisions required for a service, i.e. provisions on account of revenue expenditure, capital expenditure, grants to the state and union territory governments and also loans and advances relating to the service. Rule 51(3) The demand for grants shall be presented to Parliament at 2 levels. The main demand for grants shall be presented to Parliament by the Ministry of Finance, Budget Division along with the annual financial statement, while the detailed demands for grants, for consideration by the Departmentally Related Standing Committee, DRSC, of the Parliament, are laid on the table of the Lok Sabha by the concerned ministries' departments, as per dates approved from time to time. Rule 52(1) Form of Annual Financial Statement and Demands for Grant. The form of the annual financial statement and demands for grants shall be laid down by the Finance Ministry and no alteration of arrangement or classification shall be made without the approval of that ministry. Rule 52(2), the heads under which provision for expenditure shall be made in the demands for grants or appropriation shall be prescribed by the Finance Ministry in consultation with the Administrative Ministry or Department. The authorized heads for expenditure in a year shall be as shown in the detailed demands for grants passed by Parliament, and no change shall be made therein without the formal approval of the Finance Ministry. Rule 52(3), the major head-wise provisions in the detailed demands for grants shall match with the provision made in the demands for grants presented by Budget Division, as the appropriations are sought on the basis of demands for grants. Note: detailed instructions for preparation of the budget are available in Appendix 2, 3 and 4. Rule 53(1), acceptance and inclusion of estimates. The estimates of receipts and expenditure of each ministry, department shall be scrutinized in the Budget Division of the Ministry of Finance. Secretary 11. Expenditure may hold meetings with secretaries or financial advisors of administrative ministries or departments to discuss the totality of the requirements of funds for various programs and schemes, along with receipts of the ministries or departments. Rule 53(2), the estimates initially submitted by the departments may undergo some changes as a result of scrutiny in the Budget Division, Ministry of Finance and deliberations in the pre-budget meetings between the Secretary Expenditure and the Secretary of Financial Advisor of the department concerned. The final estimates arrived at on the basis of scrutiny and pre-budget meetings shall be incorporated in the budget documents. Rule 54, outcome budget. After finalization of the estimates for budgetary allocations, the Department of Expenditure in consultation with NITI Aayog and the concerned ministries shall prepare an outcome budget statement linking outlays against each scheme project with the outputs, deliverables and medium-term outcomes. The outputs, deliverables shall be mandatorily given in measurable quantitative terms on the basis of parameters, and deliverables decided in advance, on the basis of projections made in the Medium-Term Expenditure Framework (MTEF) statement. Allocations for each scheme project shall be against a firm set of deliverables which shall be adhered to. The performance against specified outcomes would form the basis of deciding on the continuation of the scheme and the quantum of budget allocation. Rule 55, vote on account. If the appropriation bill seeking authorization of the Parliament to make expenditure in consonance with the budget proposal is likely to be passed after the start of the financial year to which it corresponds, then pending the completion of the procedure prescribed in Article 113 of the Constitution for the passing of the budget, the Finance Ministry may need to obtain a vote on account to cover expenditure for a brief period in accordance with the provisions of Article 116 of the Constitution. Funds made available under vote on account are not to be utilized for expenditure on a new service. Rule 56, communication and distribution of grants and appropriations. After the appropriation bill relating to budget is passed, the Ministry of Finance shall communicate the same to the ministry's departments, which, in turn, shall distribute the same to their subordinate formations. The distribution so made shall also be communicated to the respective pay and accounts officers, who shall exercise check against the allocation to each subordinate authority. 2. Control of expenditure against budget. Rule 57(1), responsibility for control of expenditure. The departments of the central government shall be responsible for the control of expenditure against the sanctioned grants and appropriations placed at their disposal. The control shall be exercised through the heads of departments and other controlling officers, if any, and disbursing officers subordinate to them. Rule 57(2), a grant or appropriation can be utilized only to cover the charges, including liabilities, if any, of the past year, which are to be paid during the financial year of the grant or appropriation and adjusted in the account of the year. No charges against a grant or appropriation can be authorized after the expiry of the financial year. Rule 57(3), no expenditure shall be incurred which may have the effect of exceeding the total grant or appropriation authorized by Parliament by law for a financial year, except after obtaining a supplementary grant or appropriation or an advance from the contingency fund. Since voted and charged portions as also the revenue and capital sections of a grant appropriation are distinct and reappropriation inter se is not permissible, an excess in any one portion or section is treated as an excess in the grant appropriation. Rule 57.4 To have effective control over expenditure by the departments, controlling and disbursing officers subordinate to them shall follow the procedure as given below. I. For drawal of money, the drawing and disbursing officer shall a. Prepare and present bills for charged and voted expenditure separately. b. Enter on each bill the complete accounts classifications from major head down to the object head of account. When a single bill includes charges falling under 2 or more object heads, the charges shall be distributed accurately over 12. The respective heads. C. Enter on each bill the progressive total of expenditure up to date under the primary unit of appropriation to which the bill relates, including the amount of the bill on which the entry is made. E. All drawing and disbursing officers shall maintain separate registers in Form GFR 5, physically or electronically for allocation under each minor or subhead of account with which they are concerned. E. On the third day of each month, a copy of the entries made in this register during the preceding month shall be sent by the officer maintaining it, to the head of the department or other designated controlling officer. This statement shall also include adjustment of an inward claim, etc. communicated by pay and accounts officer directly to the DDO and not to his grant controlling officer. If there are no entries in the register in any month, a nil statement shall be sent. IV. The controlling officer will maintain a broadsheet in Form GFR 6 to monitor the receipt of the return prescribed in the foregoing sub-clause V. On receipt of the returns from disbursing officers, the controlling officer shall examine them and satisfy himself a. That the accounts classification has been properly given. B. That progressive expenditure has been properly noted and the available balances worked out correctly. C. That expenditure up to date is within the grant or appropriation. And D. That the returns have been signed by disbursing officers. Where the controlling officer finds defects in any of these respects, he shall take steps to rectify the defect. When all the returns from the disbursing officers for a particular month have been received and found to be in order, the controlling officer shall compile a statement in Form GFR 7, in which he shall incorporate a. The totals of the figures supplied by disbursing officers. B. The totals taken from his own registers in Form GFR 5. C. The totals of such adjustments under the various detailed heads as communicated to him by the accounts officer on account of transfer entries and expenditure debited to the grant as a result of settlement of inward account claims and not reckoned by his DDOs. If any adjustment communicated by the accounts officer affects the appropriation at the disposal of a subordinate disbursing officer, the fact that the adjustment has been made shall be communicated by the controlling officer to the disbursing officer concerned. On receipt of all the necessary returns, the head of the department shall prepare a consolidated account in Form GFR 8, showing the complete expenditure from the grant or appropriation at his disposal up to the end of the preceding month. Rule 57.5 The head of the department and the accounts officer shall be jointly responsible for the monthly reconciliation of the figures given in the accounts maintained by the head of the department with those appearing in the accounts officer's books. The procedure for reconciliation shall be as follows. TDOs shall maintain a bill register in Form TR 28A, and note all bills presented for payment to the POW in the register. As soon as checks for the bills presented for payment are received, and the status of A payments are verified from the reports available with DDO on PFMS portal, these shall be noted in the appropriate column of the bill register and the DDOs shall ensure that the amounts of checks tally with the net amount of the bills presented. In case any retrenchment is made by the POW, a note of such retrenchments shall be kept against the bill in the remarks column in TR 28A. The PAOs shall furnish to each of 13. The DDOs including check, drawing DDOs, an extract from the expenditure control register or from the compilation sheet every month indicating the expenditure relating to grants controlled by him classified under the various measurement or detailed head of accounts. The statements for May to March shall also contain progressive figures. On receipt of these extracts from the PAOs, the DDOs shall tally the figures received, excluding book adjustments, with the expenditure worked out for the month in the GFR 5 register. Discrepancies, if any, between the two sets of figures shall be promptly investigated by the DDO in consultation with the POW. He shall also note in the GFR 5 register particulars of book adjustments advised by the POW through the monthly statement. Thereafter, the DDO shall furnish to the POW a certificate of agreement of the figures as per his books with those indicated by the PAOs by the last day of the month following the month of accounts. IV. The Principal Accounts Officer or POW, wherever payments relating to a grant are handled wholly by a POW of each ministry, shall send a monthly statement showing the expenditure vis-a-vis the budget provision under the various heads of accounts, in the prescribed pro forma, to the heads of departments responsible for overall control of expenditure against grant of the ministry as a whole. The figures so communicated by the Principal Accounts Officer or the POW concerned shall be compared by the heads of departments with those consolidated in Form GFR 8, and differences, if any, shall be taken up by the heads of departments with the Principal Accounts Officers or the POW concerned for reconciliation. The head of the department shall furnish a quarterly certificate to the Principal Accounts Officer certifying the correctness of the figures for the quarter by the 15th of the second following month after the end of quarters April, June, July, September, October, December and January, March. Rule 57. 6. The departments of the central government shall obtain from their heads of departments and other officers under them the departmental figures of expenditure in Form GFR 8 by the 15th of the month following the month to which the returns relate. The figures relating to revenue and capital expenditure shall be separately shown in these returns. The information so obtained shall be posted in registers kept for watching the flow of expenditure against the sanctioned grant or appropriation. Progressive totals of expenditure shall be worked out for the purpose. If the departmental figures obtained in Form GFR 8 and posted in the registers require correction in a subsequent month, heads of departments or other officers shall make such corrections by making plus or minus entries in the progressive totals. In case the accounts office figures which subsequently become available are found to be higher than departmental figures, the former shall be assumed to be the correct figures, as appropriation accounts are prepared on the basis of the figures booked in the accounts. Rule 57. 7. The departments of central government shall also obtain from the heads of departments and other authorities under them, statements showing the details of the physical progress of the schemes for which they are responsible. This statement shall show the name of the scheme, the budget provision for each scheme, the progressive expenditure on each scheme, the progress of the scheme in physical terms and the detailed reasons for any shortfalls or excess, both against physical and financial targets. Rule 57. 8. A broadsheet in Form GFR 9 shall be maintained by the departments of central government or each head of department and other authorities directly under them, to watch the prompt receipt of the various returns mentioned above from month to month and to take necessary measures for rectifying any defaults noticed. Rule 58. Maintenance of liability register for effecting proper control over expenditure. In order to maintain proper control over expenditure, a controlling officer shall obtain from the spending 14 authorities liability statements in Form GFR 3A every month, starting from the month of October in each financial year. The controlling officer shall also maintain a liability register in Form GFR 3. Rule 59. Personal attention of the head of department controlling officer required to estimate savings or excesses. A head of department or controlling officer shall be in a position to estimate the likelihood of savings or excesses every month and to regularize them in accordance with the instructions laid down in Rule 62. Rule 60. Control of expenditure against grant, appropriation and ultimate responsibility of the authority administering it. The accounts officer shall report to the head of the department concerned immediately on the first appearance of any disproportionate expenditure, particularly in respect of recurring items of expenditure under any grant or appropriation or primary unit of appropriation thereof. However, the authority administering a grant appropriation is ultimately responsible for the control of expenditure against the grant appropriation and not the accounts officer. Rule 61. Excess expenditure. 1. The accounts officer shall not allow any payment against sanctions in excess of the budget provisions unless there is specific approval of the Chief Accounting Authority. 2. The financial advisors and Chief Accounting Authority, before according concurrence for excess under any head, shall ensure availability of funds through reappropriation, supplementary demands for grants. Refer Appendix 10. Rule 62. 1. Surrender of savings. Departments of the central government shall surrender to the Finance Ministry, by the dates prescribed by that ministry before the close of the financial year, all the anticipated savings noticed in the grants or appropriations controlled by them. The Finance Ministry shall communicate the acceptance of such surrenders as are accepted by it to the accounts officer, before the close of the year. The funds provided during the financial year and not utilized before the close of that financial year shall stand lapsed at the close of the financial year. Rule 62(2), the savings as well as provisions that cannot be profitably utilized shall be surrendered to government immediately they are foreseen without waiting till the end of the year. No savings shall be held in reserve for possible future excesses. Rule 62(3), rush of expenditure, particularly in the closing months of the financial year, shall be regarded as a breach of financial propriety and shall be avoided. The financial advisors of the ministry's departments shall ensure adherence to the stipulated monthly expenditure plan and the guidelines issued in this regard by the Budget Division, Department of Economic Affairs, from time to time. Rule 62(4), the financial advisors of the ministry's departments shall ensure adherence to the stipulated quarterly expenditure plan and the guidelines issued in this regard by Ministry of Finance from time to time. Rule 63, expenditure on new service. No expenditure shall be incurred during a financial year on a new service, not contemplated in the annual budget for the year except after obtaining a supplementary grant or appropriation or an advance from the contingency fund during that year. The guidelines to determine cases of new service, new instrument of service, are contained in Annexure 1 to Appendix-3. Rule 64(1), additional allotment for excess expenditure. A subordinate authority incurring the expenditure shall be responsible for seeing that the allotment placed at its disposal is not exceeded. Where any excess over the allotment is apprehended, the subordinate authority shall obtain additional allotment before incurring the excess expenditure. For this purpose, the authorities incurring expenditure shall maintain a liability register, in Form GFR 3. Rule 64(2), a disbursing officer may not, on his own authority, authorize any payment in excess of the funds placed at his disposal. If the disbursing officer is called upon to honor a claim, which is certain to produce an excess over the allotment or appropriation at his disposal, he shall take the orders of the administrative authority to which he is subordinate before authorizing payment of the claim in question. The administrative authority shall then arrange to provide funds either by reappropriation 15 or by obtaining a supplementary grant or appropriation or an advance from the contingency fund. Instructions contained in note below Appendix the 10th of may also be kept in view. Rule 65(1), reappropriation of funds. Subject to the provisions of Rule 10 of the Delegation of Financial Powers Rules, and also subject to such other general or specific restrictions as may be imposed by the Finance Ministry in this behalf, reappropriation of funds from one primary unit of appropriation to another such unit within a grant or appropriation, may be sanctioned by a competent authority at any time before the close of the financial year to which such grant or appropriation relates. The primary unit in this regard shall be the final unit of appropriation, i.e. the object head of account.